You don't need a six-figure salary or 100,000 saved in your bank account in order to become a millionaire. Some of the most financially secure clients that I know don't earn huge paychecks. They've just mastered the skill on how to make money work for them. And this is exactly what I'm going to break down in this video. In the next 10 minutes, I'm going to broaden your understanding on the 5 key assets that have historically held their values through various economic and social changes. If you're new to this channel, hi, I'm Rajj, a finance coach, a qualified accountant and a finance architect. And on this channel, we talk about personal finance, investing and business opportunities. So let's dive in where I will explore the 5 most lucrative assets that have skyrocketed their value over the last 40 years, making so many multi-millionaires today. Asset class number 1, real estate. If we look back the last 20 years, we've survived a financial crisis that happened in 2008, a global pandemic, various wars such as the one that's happening in Ukraine, and now Donald Trump's tariffs that has recently sent the stock markets to crash. In spite of all of this, asset class real estate has proven to be a financial, secure and powerful wealth building asset because people always need somewhere to live. I've been investing in real estate over the last 14 years and it's worked out really well for me. I didn't have much saved up when I was buying my first house that I decided later to rent out. Despite what happens to the economy, whether we face another pandemic or another trade tariff, there will always be a demand for housing. A stock bought for a company that collapses will fall to zero. However, a house in a good location will never be short of demand, such as in London or New York. During a recession, when the global market slowed down and the prices of real estate falls, what we've learned from some of the recent financial crashes is that the value of real estate eventually recovers and increases over time. When we look at a financial asset and also a fundamental human need, it's inevitable. The value of that asset will increase. Real estate will give you back control into your hands as the appreciation will allow you to build wealth over time. If you've entered into real estate, you can turn an average property into a high value asset by doing some simple renovations. Most assets only bring value when you sell them. When supply and demand dynamics remain the way they have been for the last 40 years or so, based on previous market trends, there is a strong chance by holding on to this asset for the long term, you will most certainly be building strong wealth. This won't be changing anytime soon as we have a growing population. The need for housing is still growing and so are house prices. Other investments may feel more intimidating to enter into the market, requiring expert knowledge in this area before you invest. However, with real estate, it's far more simpler. Making your first steps into real estate or property is more accessible and only requires a small investment to get yourself started. You can be a homeowner from any social demographic with any income level and have the same opportunity to build wealth through real estate ownership. If you bought a house back in the year 2000, the average price you would have paid is around $78,000. However, fast forward 24 years and the average price you would pay today for a house is $265,000. That's a staggering $187,000 in profit if you ever decided to sell. Even if you decide to rent this out, you will have an asset that will pay for itself. Here's a question to those viewing. What has been the most recent asset that you bought that you feel is a great investment based on your prediction? Please let me know by dropping in the comments and I will share mine with you. Asset class number 2, land. Land is a finite asset that cannot be created or replicated. The value of land is driven by limited supply and increasing demand. You cannot build real estate or property without land, and land is even older and yet a profitable investment. The beauty of owning land is, unlike other assets, it cannot be created or replicated or even manufactured like you can with other assets. Every asset tends to carry some level of risk. However, land has a permanence and will always have a long-term value that appreciates. An economic downturn or a global pandemic will never impact the amount of land that is available, as this will always remain the same. The population will in fact grow over time, so owning land will have this fundamental value. When we look at other assets such as stocks and shares and real estate, you will recognize none of them have a limited supply like land does. The government can print more money, and when they do this is called quantitative easing. Quantitative easing involves a central bank buying assets from banks and other financial institutions to inject liquidity into the financial system and encourage lending. Nobody can make more land, and whilst the population increases, the demand for land continues to rise, pushing land prices even higher. If you owned land held in specific areas such as city centres or land with natural resources such as rock, They will always be in demand because they serve critical economical and social purposes. With real estate, as more people are moving into a specific concentrated areas, the competition for good land gets even more intense, which makes it even more valuable. Owning land carries very, very low maintenance to retain its value, and it does not wear out, whereas a house will always require maintenance and renovations. If the government decides to start developing the areas around your land, that market price of your land will increase indefinitely. Some landowners that I know get more value out of the land that they own by leasing out the land to farmers, businesses, or developers. You don't have to sell land in order to make money from it. You can buy land in the right location and you can be the one developing properties on this land, which drastically increases in value. Land is one of the few assets that hold its value indefinitely. Whereas houses can fall apart and businesses can fail, but land will always be repurposed. It's a pretty low risk and high reward investment overall, I would say. Asset class number 3, arts. Now this has to be one of my favorites. This has become a bank account for the rich and wealthy. For many, many years, the upper class have bought and sold art to demonstrate their financial wealth and status. The value of art sits outside normal financial trading. There are no economic conditions that would impact a piece of art, such as inflation or government policies, or even Donald Trump's tariffs. The fundamental value an art piece can carry means it could be worth whatever somebody is willing to pay. The price of art is more subjective than any other asset. If you look at some of the most skilled artists, such as Picasso, Van Gogh, or Banksy, their pieces have increased in value as the demand for their art pieces have grown in demand substantially. When you look at this piece of artwork, it was sold for 170 million in 2022, and I'm sure whoever bought this, it would now be worth around $200 million. What most typical investors won't recognize is that art pieces have a tendency for appreciating over time and can outperform traditional investments in index funds and ETFs. So many investors have overlooked art as any type of investment, since it does not generate any type of cash flows like a rental property or a stock that will pay you dividends. When you look at the current position of the stock market today, the S&P 500 has fell into a sharp decline, whereas some of the art markets continue to showcase some of the best blockbuster auctions. When you look at the timeline of art and the return on investment it's made, this has overtaken the S&P 500 over the past 30 years. What's more, you may not know this, but you can buy shares in painting just like you would with stocks. When you sell, you get a portion of the profits. This is one of those wealth-building strategies that's been out of reach until now. The one thing I truly love about art to generate wealth is that this carries so much history, and quite classically, art will never get dated in any home. Whether this art is hung in a museum or sold at auction, art will always be a safe yet lucrative investment to create an abundance of wealth. For those looking to diversify their assets and preserve value across generations, investing in high quality art remains one of the most reliable and rewarding ways to do so. Asset class number 4, stocks in blue chip companies. When you look to invest, you should plan to invest for the long term, to build wealth, to maintain a competitive advantage. Warren Buffett famously quotes, "When deciding whether or not to invest in a company, it's to question whether that company will still be booming in the next 50 years. Stocks have some risk attached to them, as their value can either rise or fall. All stocks bought are an investment, however, not all of them will maintain their share price based on various factors. One example was the BP oil spill that happened in the Gulf of Mexico back in 2010, causing the BP share price to fall by around 55%. When you invest in a company, you will find some company share price will rise and continue to grow in the financial markets. When you look at the most thriving companies in the world, such as Apple, Microsoft, Amazon, and Google, they have been instrumental to our modern day and everyday life. From the launch of smartphones, cloud computing, operating systems, and search engines, these are simply a phenomenon in the way we conduct our modern day lives. With this ever-growing reliance on these companies and services, they are likely to continue to be indispensable for the next few decades. In an economic downturn, consumers will always need the essentials such as food, healthcare, technology, and financial services. When the economy slows down, most investors start to panic, whereas other companies welcome the opportunity to adapt, expand, and buy up their competitors. A single share in Amazon after they were first listed in 1997 was valued under $1. Fast forward 28 years later, the share price is now valued at $188. Business change and transformation is fast evolving as they lead this and continue to expand their market share in different segments. Google initially served as a search engine leader and have now branched out to become a leader in artificial intelligence, cloud technology, and advertising. The one thing you will notice that is common for all of these companies across the board is that they continually invest in innovation, meaning that your investment in these companies will hold its value and compound over time. Big blue chip companies like this, although in the short term their share price may fall, what we've experienced so far is that these dominant players recover very quickly, making them safe long-term investments. Asset class number 5, precious metals. Metals such as gold and silver have been used as a form of wealth and currency for centuries. When you look at the history of gold and silver, their value and worth have increased. These assets are not dependent on a single company or economic system. Companies listed on stock markets rely on corporate earnings, whereas real estate focuses on market demand financing. However, there is no such system that controls these metals for gold and silver. Over the past, many of us have turned to investing in gold and silver, particularly during the times of war, high inflation, or during an economic collapse. If you look at this graph, you can see how gold has increased by over 20% in the last 3 months. This is more than the average rate of return the S&P 500 has returned, which is around 8%. Since gold and silver have a limited supply, they generally do not get devalued from major collapses in prices like you have witnessed with stocks. Gold in general is worn and hoarded, while silver is similar but commonly used in manufacturing. For example, silver is used in the production of Tesla cars that are manufactured. In this article written by Medium, it breaks down how Tesla's SpaceX requires silver. This article later goes on to say in order to produce and embrace green technologies like solar panels, this metal is pivotal to produce green and renewable energy. The scarcity of both gold and silver means they will always hold their value. During the times of volatility when financial markets become unstable, gold and silver prices rise in value because investors see them as safe haven assets. It doesn't really decay, rely on earning reports, or need infrastructure to maintain its worth. Any assets that meet these 3 criteria is going to hold on to value over multiple generations. An intelligent investor doesn't think about how he would improve in a day or a week. They look at investing that will make their money grow within the next 10, 20, or even 50 years from now. Intelligent investors look at history, market cycles, and economic fundamentals rather than chasing that hype they know that could end tomorrow. Getting rich is only part of the goal. The big step is to keep growing that wealth. And when you invest in assets that have held their value through revolutions and countless disasters, then you're locking in multi-generational wealth. This covers the 5 different long-term investments in different asset classes that continue to grow and have made many millionaires and built great wealth from this. I hope you've enjoyed this video, and if you have, please don't forget to hit that like button, and please don't forget to subscribe to my channel, and I'll see you on the next one.